Hello kind people of YouTube and welcome back to another video. As always, today we are going to take a look at the crypto markets before going through a few news articles that caught my interest in the last day or so. It's a relatively exciting day today with some good news coming out specifically for Ripple and Binance, and we're going to be talking about it. But first, a look at the markets, and let's refresh this again. I just refreshed it, but I always want to have the most up-to-date numbers. We see the markets mainly sideways or down a tiny bit. Not all that much movement, with market cap at 198.8 billion. We have seen this hover around 200 billion for the past week or so now, always slightly above or slightly below, so this is pretty ordinary in the last couple days. Bitcoin dominance continues to fall bit by bit, now at 55.2%. We have seen it reach 57%, then drop to 56%. And I believe yesterday it was around 55.6%. So right now, altcoins are definitely outperforming Bitcoin. We see here mostly everything down a bit. Some coins have managed to make some wins. We see here XRP up almost 1% after a spectacular day yesterday, as you can see here, where we have seen just about 20% gains. And I think we saw 15% yesterday, and then earlier today we saw 10% gains, some of which have been undone since. And then EOS is up a tiny bit, 0.41%, and Cardano is also doing very well, one of the few coins breaking out of this slight slump. But mostly the coins that aren't performing well are only down under 2%. The worst ones of the major coins are Bitcoin Cash down 2.8% and Stellar down 2.46%, so all still very much good. If we're looking at XRP here, if we look at the 7 days here, we see that while we are only slightly up as compared to exactly 24 hours ago was here, that was just after the jump up yesterday, so we are still up. Essentially, we were at 27 cents, now we are at 32.6. We are still up pretty much 20% since a day and a half ago. It doesn't show up in the 24-hour numbers anymore because those now match onto just when it jumped up. But we have held on to pretty much all the gains, and we now seem to have found a healthy basis around 32 cents rather than the 27 cents we have seen for the week before, or the 27 to 28. So that is all looking very beautiful. XRP in particular is looking very, very well right now. Very good. And of course, we do have news that XRapid is going live any day now, allegedly within the next month. And there's a good chance that we will see another jump up like this when that happens. But now let us look at a market analysis. This is 4 hours old, but still more or less fitting the current numbers. Ripple rises again in 10% jump, Bitcoin volume up 26% to 4 billion. Cardano and Ripple have surged by more than 10% in the past 24 hours, while Bitcoin maintains stability, leading the recovery of the crypto market. Earlier this week, the valuation of the crypto market dropped to $190 billion, which led investors to worry about a potential fall to the market's yearly low point at $185 billion. Bitcoin has remained relatively stable in the $6,300 region, as it has been throughout the past few weeks. On September 16th, when the Bitcoin price was hovering at about $6,500, CCN reported that the low volume of the dominant cryptocurrency can be considered as a short-term weakness of the market that could leave major cryptocurrencies vulnerable to a drop in price. Generally, after a slight decline in price, a minor corrective rally occurs and major cryptocurrencies increase by small margins. But the low volume of Bitcoin, which is currently at 3.3 billion, can be considered as a concern for traders, the report read. On September 17th, the price of Bitcoin dropped below $6,300 as Ethereum, the native cryptocurrency of Ethereum, fell back down to the $190 region. After recording a minor corrective rally on September 18th, the crypto market has shown decent gains throughout the past 48 hours. Crucially, the volume of Bitcoin, which remained below 3.4 billion in the past several days, has recovered to 4 billion. Within a period of 3 days, Bitcoin has experienced an increase in volume of more than 26%, from 3.4 billion to 4.3 billion. Such a rapid increase in the volume of Bitcoin supported by strong performance of major cryptocurrencies like Cardano and Ripple are expected to fuel a short-term rally, which may see Bitcoin testing resistance levels at 6.5, 6.6 and 6.8. For nearly 2 months since early August, Bitcoin has struggled to properly breach out of the $6,000 region. Bitcoin has remained volatile in the 6,300 to 6,600 range, unable to find momentum in the high 6,000 region. If the volume of Bitcoin at around mid $4 billion can be maintained in the weeks to come, a potential rally towards $7,000 is a possibility, given that the market has shown weakness despite massively oversold conditions. Analysts state that the continuous drop in the prices of major cryptocurrencies will likely lead to a strong corrective rally, especially if investors in the global crypto market recognize the oversold conditions and refuse to sell in the low price range. This week, Upbit and Binance, two of the largest cryptocurrency exchanges in the global market, have expanded to Singapore, a region that has been known for its friendly crypto and blockchain regulations but has struggled to see large-scale exchanges thrive. Government officials in the UK have emphasized the necessity to grow the local cryptocurrency and blockchain sector to ensure that it can remain competitive with other major regions. In terms of regulation and institutionalization of cryptocurrencies, the market has seen more developments in the past month than it has seen in the past 8 years. Now here we have a relatively optimistic outlook. Everything seems to be pointing towards a corrective rally. The only question is exactly when and how high will it go. But something that I thought was interesting that I haven't seen articles really mention, and that we saw yesterday if you were watching the market as Ripple shot up, as XRP shot up rather, you would have seen that XRP dragged everything else along with it. If you look at these 7-day price graphs where XRP shot up, you will notice it's very hard to see here, but it happened ever so slightly before the other coins shot up. XRP shot up by about 10%, and then everything else started shooting up, but lower percentages. Like everything was also shooting up, but most coins only between 2 and 5%, when just before everything was in the red. But it started with XRP, and other coins did not go up quite as far as XRP did, gaining 20% in that one day. It dragged everything else along. I believe this is the first time we have seen XRP do that to the markets. Correct me if I'm wrong if that has happened before, but usually what we see is Bitcoin is the one to drag the entire market along. I think Ethereum has managed to drag the markets once or twice before as well. But generally, when anything that isn't Bitcoin has a large jump up or a large tumble down, it doesn't really tend to affect other cryptocurrencies. It might affect one or two that are in some way related to them, but generally it doesn't have an impact on the entire market. What we saw yesterday was XRP gaining significantly, gaining 20% in over an hour, just over an hour I think. And everything else was being dragged along. We have never, to my knowledge, seen that before. The number 3 cryptocurrency moving the entire market, that is pretty much unheard of. And I think it's a sign of the cryptocurrency markets fundamentally changing. Everything isn't simply pegged to Bitcoin anymore the way it used to be. I was talking about this before a couple weeks ago when we saw that usually you see the price movements of all the major coins more or less match. Like we can see Bitcoin and Ethereum going through almost the exact same movements here, sometimes more or less exaggerated, but it's still the same movement. But you can tell it is more, there are more individual movements in the individual cryptocurrencies than there used to be. Not everything just matches the Bitcoin movement anymore. So not everything is so directly pegged to Bitcoin. Despite Bitcoin having more than 55% dominance, it doesn't have as much control as it used to about the movement, over the movement of the entire market and of other coins in it. And I think that's generally a good sign because when you see a major stock crash, it doesn't usually drag the entire stock market along with it. And with crypto, so far what we have seen is when Bitcoin crashes, it does drag the entire market with it. The more we can unlink these things, the better. Now, a lot of that is a side effect of just the markets maturing, people having more of an understanding of them, people understanding the individual projects within them. What is also helping is financial products that only deal in individual altcoins, as well as exchanges where there are direct exchange pairs between fiat currencies and tokens that are not Bitcoin. Like some exchanges have dollar XRP, dollar Ethereum trading pairs and stuff like that. That helps, as well as some exchanges now having Ethereum or XRP as the base currency. That will all help unlink Bitcoin from the entire markets a bit. Now, we just have to be careful that we don't link it too strongly to any of the other currencies as a result. But right now, it's looking like a positive development. There's more freedom within the markets, and that is ultimately very good for altcoins because they don't have to worry quite as much about how well Bitcoin is doing anymore. Like over and over again, we've seen Bitcoin crash or Bitcoin shoot up, and everything else was dragged along, and regardless of if those cryptocurrencies got good or bad news. And I think we're going to see that happen less and less. It's not going to stop, but I think the degree to which Bitcoin has control over altcoins will continue to drop, and that is a good development. I think that is very good for the markets. That had to happen. But anyways, I've been ranting about this first news story for 10 minutes already. I still have 5 other tabs open, so let's get to it. Top 10 US bank joins Ripple blockchain RippleNet for cross-border payments. This huge news for Ripple. This is of course using their X-Current technology that doesn't necessarily use the XRP token, but as I keep pointing out on this channel, Ripple's strategy is to get a lot of banks, a lot of financial institutions on board with X-Current and then ease them into using XRapid at some later point because it has further advantages over X-Current. This is their strategy. This is not them failing to integrate XRP. This is the strategy. This is meant to happen. So let's read. PNC Bank, the 9th largest bank in the United States by assets, has joined Ripple's enterprise blockchain network RippleNet in what is a noteworthy addition for the San Francisco-based fintech. With over $380 billion in assets, Pittsburgh-based PNC Financial Services Group has become the latest member to join RippleNet, a global payments network of over 100 institutions including banks, payment providers, remittance forwarders, and operators, among other financial institutions, to enable near-instant money transfers with on-demand liquidity and end-to-end tracking on a blockchain. PNC Bank, simply known as PSC, is also the 5th largest bank by number of branches and the 4th largest with the most ATMs in the United States. The bank services over 8 million customers in 19 states in areas including retail, consumer-ending banking, and corporate banking. While retail services, including consumer and small business banking, is predominantly offered to clients in the eastern states, PNC offers corporate and institutional banking across the country. Ripple said in its announcement, Ripple's technology will have an immediate impact on each of these groups, enabling PNC's commercial clients to receive payments from overseas banks in real time. As an example, a commercial client of a business transaction situated in Pennsylvania will be able to receive payments from a UK buyer against the invoices instantly, Ripple explained, enabling the client or business owner to benefit from managing their working capital and accounts receivably. The addition of PNC is arguably Ripple's biggest banking scoop for its flagship product, which notably doesn't use the XRP token, a cryptocurrency developed by Ripple. XRapid, a separate Ripple product which uses XRP for real-time liquidity in international transactions, has seen relatively fewer adopters compared to the 100+ member-strong RippleNet. While the likes of Western Union have trailed the XRP-based product for money transfers, a wider commercial application for XRapid is only a month away, according to Ripple's Chief of Regulatory Relations in APAC and the Middle East. I am very confident that in the next 1 month or so, we will see good news coming in where we launch the product live in production, he said in an interview earlier this week. Ripple Chief Executive Brad Garlinghouse has previously claimed that dozens of banks will be using XRP by the end of 2019. Now we see once again, pretty much every other day there's some kind of big news surrounding XRP, surrounding Ripple coming out. Most of these news right now are about Ripple and their X-Current technology, their X-Current systems. But like I say over and over, this is their onboarding, and XRapid is not completely live yet. So of course they're not all using XRapid yet. The product isn't in full, isn't fully active yet. That is coming next month. Their business plan: get all these banks, get all these remittance firms, all these financial institutions to use X-Current, which by the way can also use the XRP token. It doesn't have to, but it can. and then onboard them and get them deeper into their ecosystems and make them use XRapid in the future. So this is all according to plan. And like Garlinghouse said, in 2019, there will be dozens of banks using XRP by his estimation. Now, he of course knows about all these banks that have signed on that we don't know about yet because news haven't been released yet. He knows which banks they're in discussion with that we don't know about yet. So I'm gonna take him at his word here. I'm gonna say 2019 we're gonna see dozens of banks using XRP. That will mean a massive, massive, massive daily volume for XRP. That should shoot the price up like crazy. So even after these 20% gains, keep in mind, this might be close to the lowest you will ever see XRP again. If all of this happens, and we have no reason to believe he's lying here, then by 2019 there's a very good chance that XRP will shoot up significantly in value, simply because so much is being processed through it. Anyways, let's continue because this video is getting long. Swiss crypto startup Ado, I hope that is the correct way to pronounce it, announces token tied to the price of gold. Now, we don't have to read the entire article here, I just thought it was interesting and we should quickly mention that it's a reality now. Ado has become the latest cryptocurrency startup to seek to create a more stable token by tying it to the price of gold. The Switzerland-based startup says the ERC20 compatible token, dubbed the Econ, will sit alongside its multi-currency wallet and decentralized exchange. But perhaps most notably, each token will be redeemable for 1 gram of 99.9% fine gold, which the startup says will be stored in its vaults and audited every 90 days. People will be able to see the gold stored in the security vaults through a video camera. We will post a link on the website so everyone can control the gold. This, I think, generally a good way to deal with it, especially the video feed is a good idea. I'm not sure we necessarily need a cryptocurrency pegged to gold, but I know which symbolic value gold has in the investing world. So seeing this, I have nothing negative to say about this as of now. This is not an endorsement of the project, I'm just saying it looks interesting, looks like a good idea, looks like they're dealing with it pretty well. And as always, all the articles are linked in the description so you can read up on all of this there. Next up, Singapore central banker. No crypto tokens we've seen are securities. Now this of course the opinion of one person only, not representative of either Singapore as a whole or of other countries' decisions, but I still think this is an interesting perspective with so many people worried that, for instance, XRP might be declared a security. Now, let me just say first up, I don't think we should be that worried about that. Because ultimately, many traditional financial products are securities, and it hasn't stopped anyone from making money from them. It hasn't stopped any of them from gaining significant value. It hasn't stopped them from being traded. Stocks and bonds, those are securities. So why are we scared? If XRP or any other token is declared a security, and that is a big if because a lot of signs are pointing towards them not being a security right now, that will be a short-term setback. That will primarily mean that there is a bit of a stop sign between more exchanges adopting it and selling it and it being used in more products. But long-term, that won't have that much of an effect. It just means to be able to trade securities, you need additional clearances and additional certificates and stuff like that. But ultimately, that shouldn't scare us. It's different. It puts up additional problems, but long-term being a security has never stopped anyone from making money. So don't be scared. But anyway, let's read this. The Monetary Authority of Singapore, the city-state's de facto central bank, believes that no tokens it has seen need to be regulated under its securities laws. During a fireside chat at CoinDesk's Consensus Singapore 2018 conference on Wednesday, Damien Pang, I hope that was correct, head of the MAS Technology Infrastructure Office for FinTech and Innovations, opened up to the audience about a guide to digital token offerings, a framework it published in 2017 that was meant to provide clarity to crypto entrepreneurs. He said, emphasized a reason for the difference in his statements and those by regulators internationally. He said every jurisdiction has their own set of criteria of judging what is or isn't a security. As such, he said regulators like the US Securities and Exchange Commission, which has also been vocal on the subject but has yet to offer a framework, can be expected to possibly come to a different conclusion. The 13-page MAS publication divided tokens into 3 categories: utility tokens, payment tokens, and securities tokens. He went on to state for the first time that he believes any categorization of a digital token applied by MAS could change over time depending on their current and future characteristics. He told attendees, "The MAS takes a close look at the characteristics of tokens in the past, at the present, and in the future, instead of just the technology built on it." Now, we don't have to read the whole thing, but at the end here, the moment you start naming names, people take it very literally. These are and these are not. But in fact, there are more than 1,000 tokens. Bear in mind, we provide clear guidelines to categorize them. So don't take him by the word too clearly here. He hasn't looked at every single token in the world. But they provide a framework for categorizing them, and according to their framework, at least none of the ones they have looked at, and we can imagine they have looked at most of the major coins, if not all of them, fall into the securities category by their assessment. Now, like pointed out in this article, the concrete definition of what a security is can differ from country to country, with different frameworks even applied within a country based on which sector of finance is looking at it, which sector of government. But this is one more voice in the general direction that cryptos don't necessarily have to be securities. I think by now we probably have more voices erring on the not securities side, with only individual tokens being in a discussion. And that, like I said, we don't have to be scared of something being declared a security, but ultimately it not being a security is easier and better for the short term. So anytime we hear this from someone with influence, someone who speaks for a government or a financial institution, that is always good. Now, next up. A bit less positive, but I think common sense. German finance minister doubts crypto can currently replace traditional currencies. Note here the currently. Germany's finance minister, Olaf Scholz, doubts that cryptocurrencies can currently replace traditional fiat currencies. Cointelegraph auf Deutsch reports today. That just means Cointelegraph in German. "I would doubt today whether it has a perspective as a currency model," he said at a citizens' dialogue at the German-Dutch Army Corps in Münster. Scholz compared cryptocurrencies to the tulip fever bubble in the Netherlands in the 17th century, saying, "And the danger is great that there will be such a tulip inflation." Scholz said that the necessary computer processes for the mass implementation of cryptocurrencies are so expensive and energy intensive that it could not work, but that he did not want to speak for the future 20 to 30 years away. Now, I think he might be working under a misunderstanding here. When he talks about how expensive and energy intensive the implementation of cryptocurrencies would be, that strikes me as him maybe thinking about proof of work mining. He might have looked at Bitcoin and heard about how incredibly expensive and energy intensive mining is, and he might think that is representative of cryptocurrencies in general. Now, everyone who is deeper in the crypto market, of course, knows that most modern cryptocurrencies do not use proof of work mining, meaning that there are massive energy savings. Newer generations of cryptocurrencies don't take an intense amount of energy to mine. A lot of them are either pre-mined or are mined with a proof of stake system, which doesn't need any of that crazy amount of energy, doesn't cost any of that money. Now, of course, mass implementation of cryptocurrencies will definitely be expensive, but not in any way that's significantly different from, say, switching to digital payments, to card payments, to tap and go payments. That it's roughly comparable to that, because you don't necessarily need new technology in a lot of spaces. You need new software in most cases, and you might need a few new hardware products at points of sale. But generally, I would say it's comparable to a switch over to card payments or to tap payments. And we see a lot of stores, at least across Europe, I can't speak for other parts of the world, but we see stores very quickly adopting tap payments. And 3 years ago, no store here had that. And that is a roughly similar change, except that crypto will be much more wide-reaching. But I don't think there will necessarily be more cost-intensive or energy-intensive than that. So I think he might be under the impression that crypto means proof of work mining. That is not the case anymore. According to Scholz, cryptocurrencies should also be closely observed by regulators, as they could be used for terrorist financing, money laundering, or other criminal activities. He added that, "We do not believe that they already have an economically significant importance today." European legislators have met in several capacities in the past several weeks in order to discuss their concerns over cryptocurrencies and the potential remedies to problems associated with digital assets. On September 4th, members of the European Parliament met to discuss regulations for initial coin offerings, which, while being a very interesting and promising vehicle instruments for raising capital, require more regulatory oversight in the view of many European legislators. At a recent meeting of the Economic and Financial Affairs Council in Vienna, European Commission Vice President Valdis Dombrovskis claimed that crypto needs further regulation. While noting that crypto is here to stay, he stressed that the European Union will focus on the development of crypto asset classification and regulatory mapping. Prior to the aforementioned meeting, a report by Belgian think tank Bruegel urged European regulators to adopt uniform regulations on cryptocurrencies at the EU level. The report notes that while regulations are left to national entities, there's an opportunity for regulatory arbitrage for crypto business. Now, I think he is probably just not as well informed as you might expect a finance minister to be about crypto. But you also have to keep in mind that finance ministers don't sign on to deal with cryptocurrencies. Cryptocurrencies were very much sprung onto regulators randomly in the last couple of years. They didn't know about them before. They are only now figuring out what they are, how they have to be regulated, what might be in their future. We as crypto followers, crypto investors, pay attention to all this. We know the potential of blockchain technologies, of utility tokens, payment tokens. We know all that. We also know about all the potential use cases out there. But you have to keep in mind, these people, they might be experts in traditional finance. And even that, the finance minister is not necessarily a financial expert. That's ministry positions are often given for very bad reasons. I don't want to say anything about Scholz here, because I do not keep up with German politics as much as I should, but just being a finance minister does not necessarily mean that you're a finance expert. That is simply not how cabinet positions work, at least not in Europe. So I don't think we should read too much into this. I think he isn't that far off when he says that right now they can't replace fiat currencies. We definitely need a lot more development. We need a lot more mainstream adoption. That will take, in my opinion, at least 5 to 10 years. But I do believe that we have tokens now that, at least with some additional development, could very much be used like fiat currency for just day-to-day payments. But like I said, we need the mass adoption that will happen slowly but surely. We need major shopping websites, we need major supermarket chains, we need train stations, we need truck stops, we need everyone to start accepting them before they can take over. And that will be a slow process. So, of course, at this current point, they can't replace fiat. That is, of course. That is absolutely obvious. The real question should be, in 10, 20, 30 years, could they either replace fiat or run along to them with equal importance? And I think there the answer is yes. But anyways, let's look at the last article of news here, and that is more positive. Binance reveals plan to launch crypto exchanges on almost every continent. Now you might wonder, why do I care what Binance is doing? They're an exchange, they're not a token, they're not developing their own blockchain. This is good for us because every time we see an exchange or any large company that is in some way involved with crypto expand, that means a lot of experts and a lot of people who are giving these companies funding think that crypto is going bigger and bigger and bigger in the coming years. I think that is always a sign that these companies are incredibly bullish and that they think there are new markets to explore that we haven't tapped yet. And that should excite all of us as investors, because all of this, if they are right, will, of course, translate into more people coming into the crypto world, more money moving into the crypto world, more money moving through the crypto worlds, and that will, of course, drive all the prices for the tokens that we hold up as well. This is good for all of us. I'm not going to read this. Everything you really need to know is in the title here. Very, very good news. We have talked about other exchanges expanding in the last couple of days as well, to Africa, to Asia. There's a lot of expansion going on. We saw, I believe it was Coinbase hiring over 100 people for their New York City office. Those are all big things. All the major exchanges are extremely bullish. They, of course, see their statistics, they see their usage, and they see that even in this bear market, there's an incredible interest, there's an incredible trading volume. They see people holding on to large amounts of tokens, they see all the movements, they have the connections, they know what is going on, and they have a better view of the immediate future than a lot of us have. And I think when these major companies are bullish, so should we be. And that is what I'm gonna leave you on today, with some great news around Ripple and with a general positive outlook at the market in the next year or two, and maybe even in the immediate future if this is a bull reversal or at least a correction. And as always, thanks for watching. Make sure to subscribe if you want to see more videos like this, and if you want to get notifications from this channel, turn on the little bell next to the subscribe button. All the links to the articles are in the description, as well as links to my social media pages. I have a Twitter and a Facebook page, and ways to support this channel if you would like, and I will see you guys soon.